Hey guys, welcome to another video of mine. I wanted to quickly share some thoughts on two concepts that have been saving a ton of money to sophisticated taxpayers over many years. I always have people coming to me telling me that they can't seem to understand how come this particular corporation or this very wealthy guy paid very little taxes at the end of the year. One of those secrets lies within those terms: shifting income and splitting income. Now, if you're not familiar with me, my name is Fabrice Metan. I'm the owner of a tax and accounting company called Simplify My Numbers. My passion is to crunch numbers and crush them. And what I mean by crush is, simplify them for my business clients to alleviate any tax issues, accounting problems, and payroll headaches. Now, to go back to what I was saying, shifting income and splitting income. So shifting income is the concept of moving income from one tax return to another. So imagine, for example, a couple that, is making very, very high income, probably in the 37% marginal tax rate, right? And also happen to have stocks that generates interest income every year. Now, they may want to move that income by gifting the stock to their kids and basically moving that from their tax return to the kids' tax return and be taxed at a much lower rate. That's something that people do. Now, when it comes to splitting income, that is the concept of actually creating additional tax-paying entities to split the income between taxpayers. So, for example, if someone who is making, say, $300,000-$400,000 a year, but is actually a professional that can create an entity that could receive some of that income instead of themselves receiving it personally, right, and being taxed at such a high rate, they can actually create a corporation that would then be taxed on the bottom line, meaning after all business expenses, and only be taxed 21%. Now, when you do that, the one thing that you have to think about is double taxation, right? And the concept of double taxation is that when you have a corporation, not only would the corporation be taxed on that, net income at the end of the year, you would also be taxed whenever you receive a dividend from that corporation. So that's one thing that you have to kind of think about. But those are techniques that people have been using for many years to be able to save on taxes. Obviously it has to be legitimate, but those are some of the things that you have to kind of remember and always ask questions about: splitting income and shifting income. We'll see you on the next video.